Yo, what's up guys, it's Chase. I'm back real quick because inevitably anytime that I post a trade idea video, I get a lot of confusion. People asking about how I will enter, things of that nature. If you haven't watched the video about the trade idea, it's right here. It's BTC trade idea for the week, December 5th. This is the trade idea right here. Okay, coming down to the 618, a sweep of liquidity into the June low, a high time frame resistance level. Okay, that's the trade idea. But then I get the questions about how to enter. So let's cover the trade criteria. First off is the, sort of our prerequisites to entry, right? The first thing you want is you want to be accurately reading the price action that delivers price to your level, right? So one thing I always get from the trolls is a troll will see price go to 17.6 and then break down through my level, right? A troll will see that and they'll quote tweet me and they'll say, oh, well, what happened to this call? Well, what happened in that call is that price already hit the target, so there was no trade. I didn't even take a trade, okay? So point is you should be accurately predicting the upcoming PA for the trade that you're interested in, okay? So if this is the trade that we're interested in, I do not want to see 17.6 hit before this 618 hits right here. This is around 16.5K. I don't want to see the high swept again, really. I'm okay with any chop or consolidation in here. This is fine with me. And then we go for the sweep. That's okay. All right. But if it goes up and sweeps, maybe I have to reconsider, be cautious of a new plan because now we're getting very close to the high time frame resistance. If it pushes into 17.6 and then it comes sweep again, I'll start looking for a new plan, or I'll have to be more careful with the levels, see what I'm looking for, because I don't really have a target anymore. Okay. So the first criteria or prerequisite, whatever you want to say, for entering a trade is that you're accurately reading the price action leading to your level. So then we move on to the second part, which is undoubtedly the hardest part of trading, which is why everyone's always so confused about it. There's two ways to enter a trade if we're keeping it simple based off of just price action in general. There's the entry at the level, so you simply just trust the level. Okay, let's mark this out. So first let's mark out this fib just so we have our levels. Okay, so the first way to enter is, and we'll talk about the pros and cons of each. The first way to enter is simply just to enter on the level. Okay, you've stopped below the consolidation that led upwards, or wherever you want to put the stop that can give you a a decent risk reward. Even if you move it down here and you leave a little space, right? You could play this tight consolidation before the move up if you want to be even safer. You can play this whole sort of preliminary consolidation in here before the move up. Nonetheless, I think that if price is going to hold, it's going to hold from in here. Okay, but that's sort of irrelevant about what we're talking about. Point being, you can either enter on the level or you can wait for what CT often calls confirmation. It is a valid strategy, okay? Because what you're doing when you're looking for quote-unquote confirmation is that you're seeing that the market, the market is essentially telling you, hey, look, I ran stops. I'm not flipping this to resistance, right? We're not seeing a rejection, right? Because then you wouldn't enter. If you're seeing that reclaim, the market's telling you, hey, this did not flip to resistance. I was just running stops, and now we're back in the game, okay? So here's the pros and cons of each. The pros of entering simply on the level, the first idea I showed you, is that you're often going to have a higher risk reward. Okay, so looking at this trade, you may be able to get something like 5 risk reward. Now, you're going to get stopped out more though, because sometimes price is just going to go through your level. It's just going to happen. That's how markets are. If we could be right every time, if we could figure out an entry strategy that worked every single time, then we would all be retired, right? And we'd all be billionaires. So sometimes the market's just going to run right through your level, and that's a part of the game. You have to understand whether you're comfortable enough with that, whether your risk parameters allow that, etc., etc. How much can your mental take of, am I capable of getting stopped out 4, 5, 6 times in a row? Is my confidence going to be completely depleted? But you do get a higher risk reward. You are playing the level. And this is what I lean towards more, okay? If you look at the previous trade that we took on my Twitter, it was this. It was a sweep of this low, going for liquidity. By the way, this was a 618 retracement as well, okay? So from this low to this high, right here was the 618. I can mark that real quick just so you guys can see it. So there it is. You can see, pull this out a little bit, and there was the low right there, the 618, tags it, and it goes for the liquidity level that this trade was based on, okay? It was liquidity to liquidity trade, sweeps the level. I entered right on the sweep. That's my preference. I'll tell you why it's my preference in a second, and it goes to the liquidity target. Okay, why is it my preference? It's my preference because I think that often when you're waiting for quote-unquote confirmation, what I've seen a lot is you get a sweep, you get a very strong reclaim or something, and you basically miss the whole trade. Now, you can still find your entry, right? You'll have to be a little bit more skilled at low time frame entries, and you still might also be able to find decent risk reward. But look, you know, we just went from a 5 risk reward to a 1.36 risk reward. So unless you're getting a very generous market in which you get, because this is what you always see drawn, right? I draw this too, but unless you're getting a very generous market that sweeps, retests, and gives you a clean invalidation, right? So you get the sweep, you get a retest, you can put your stop below there. Well, wow, now all of a sudden you can get great risk reward. But most of the time, that's not going to be the case. Most of the time, it's going to come down, it's going to reject or something, you're going to be confused on whether you should be entering or not. All of a sudden, it's going to pop up, and you're going to be like, oh, well, what would I do now? I have to have a stop below this low. Here's my target. I can't even get, you know, we're always aiming for 2 to 3 risk reward pretty much. So you can't even get risk reward there. You can't even get risk reward. So it's just, that's the pros and cons sort of. If we're looking at the first scenario is you're entering at the level, you know, you sack up, so to say. You enter at the level. You're going to get stopped out more, but you're going to get better entries. You're going to get better risk reward. Second scenario is you're waiting for the confirmation. You're going to need to be a bit more highly skilled at reading the lower time frame price action. You're most likely going to be finding your entry on the reclaim, and you'll either be chasing with a limit order or you'll be forced to enter with a market order. Okay, when people ask about limits in markets, in the first scenario, I'm almost always entering with a limit order. On the second scenario, when it comes to entering on a quote-unquote confirmation, you're either limit chasing because the market's typically moving away from you, so you're trying to chase with limit bids or asks, and most of the time you're not getting filled and you're just forced to fill at market. So that's the differences right there. Higher risk reward versus lower risk reward, getting stopped out more versus probably getting stopped out less because the market is basically giving you a tell, right? Like half the trade's already done for you, okay? It took liquidity, it didn't break down further, it gave you the reclaim, it didn't flip to resistance. You get a ton of information while waiting for quote-unquote confirmation, but you typically get less optimal risk reward. Okay, I'm trying to think if there's anything else. So trade criteria, obviously your prerequisite is reading the local price action that's leading up to your move properly. You want to read that. You want to make sure it's not going into some crazy place because then the trade's not the same anymore. Okay, so if you're reading the local price action well leading up to your trade, that's the first criteria. And then the second one is simply how are you looking to enter? Are you looking to enter at the level, simple as that, or are you looking for a quote-unquote confirmation? And then from there, just make sure your risk is in check. Let price go to target. You shouldn't be moving your stop loss until the market, and price action essentially shifts, right? So if you get a sweep of this level, you enter here, your stop is below here, something of that nature. You're not moving your stop loss until price has reclaimed this breakdown, okay? It reclaims that breakdown. You see it serve as support or something. Okay, now you can say, look, this breakdown here is now your new support. Can move my stop below here, move it up a little bit. Now your stop will be at like 1R or something, 1.5R, maybe 2R, and you let the trade go to target essentially. And obviously along the way you could take partials, you can take a partial at liquidity, etc., etc. Okay, so hopefully this was a good video explaining trade criteria and the prerequisites for entering a trade. If you have questions, feel free to post them in the comments. Like and retweets are always very appreciated on this type of stuff. It's hard to try to fit this all together in a very short video, and sort of alpha packed, so to say. Check out my link tree. I have ref links in there and stuff if you want to support me. Appreciate it very much, and I'll see you guys soon. Peace.